In 2025, the prediction market sector generated $63 billion in global trading volume. In March 2026, the combined monthly volume peaked to $25 billion in a single month. And since their creation, Polymarket and Kalshi have crossed $150 billion in combined cumulative volume. To understand why these numbers are so significant, you first need to understand what a prediction market actually is, how you access it, how you pay for it, and how some people have made millions on these platforms. So let's start with the basics. A prediction market is fundamentally different from a traditional sports. On DraftKings and FanDuel, the house sets the odds, takes a commission, and wins in the long run. It's mathematically inevitable. On the prediction market, you're not betting against the house, you're actually betting against other users. The platform acts like a financial exchange, connecting buyers and sellers, and the price of each contract, which ranges from $0 to $1, reflects the collective probability that all participants assign to a single event. Here is how it works in practice. You get a binary question, yes or no. Will the Fed cut rates in June? Or will Trump impose additional tariffs on China? If you believe that yes, you buy that yes contracts. If those contracts are trading at 30 cents, the market collectively thinks there's a 30% chance of it happening. If the event happens, every contract you bought at 30 cents is now worth $1 at resolution. You literally just multiplied your stake by more than 3x. And the real difference from traditional betting is real-time liquidity. You can sell your position at any time before market resolution. You don't have to wait for the final outcome. If an announcement pushes your contract from 30 cents to 70 cents, you can sell immediately and pocket the difference. Now, let's talk about the two players that dominate this industry. Kalshi is the first CFTC-regulated prediction exchange in US history, created in 2021. In April 2026, it generated $5 billion in monthly volume, valued at $22 billion, handling 40% of its volume with institutional traders. It's the reference platform for professional American traders. Now let's look at Polymarket, the decentralized pioneer. It was founded in 2020 by Shane Copeland, then 21 years old, and it runs on the Polygon blockchain with USDC settlement. It's valued at $50 billion with $2 billion in volume, approximately in April 2026. Together, these two platforms hold 98% of the global market. But let's focus on Polymarket, because that's actually where the most spectacular bets have happened, and where the most important question about the future of this industry are being asked. Historically, Polymarket was actually banned from the US. In 2022, the CFTC fined the platform $1.4 million for operating without a license and forced it to block its American users. In September 2025, Polymarket acquired QCX for $112 million, allowing it to finally launch legally in the US. Shortly after that, the Intercontinental Exchange, the parent company of the New York Stock Exchange, announced an investment of up to $2 billion into the platform itself. Now let's look at how you actually access Polymarket and how you pay there. Today, Polymarket accepts bank transfers, PayPal, credit and debit cards. Everything is directly converted to USDC, a dollar-pegged stablecoin, at the time of deposit. Your money sits in USDC in your blockchain wallet throughout your experience on the platform. When you want to withdraw, you convert back into dollars throughout your usual payment method. The specific feature of the blockchain is that all trades are public and traceable in real time by anyone. So every bet, every position, every amount exchanged is visible on-chain. This level of transparency is unique in the betting industry, but traders' identity actually remain completely anonymous behind their wallet address. That paradox, total transparency of transactions and total anonymity of traders, is what makes Polymarket both fascinating but also very problematic. You can see exactly how much someone is betting, on what and where, but you have no idea who they are. Alright, let's talk about the bet themselves now, because concrete examples are the best way to understand how this works in practice. Sports market represent the largest share of volume. In 2026, $1.6 billion was traded on Super Bowl markets alone. Hundreds of millions were bet on the Champions League, major tennis tournaments, and Formula One. The logic on sports market is very similar to traditional betting, but with the flexibility of real-time resale and no-house margins. Political and economic market represent around 36% of total volume, despite being only 4% of active markets. These are the markets that generate the most attention and the highest unit volumes. You can bet on Fed decision, inflation data, election anywhere in the world, Trump's trade policy decisions, government nominations. Right now on Polymarket, the 2028 US presidential election has already generated $588 million in volume. And this is where we get the most spectacular bets in the platform's history. In December 2024, an anonymous French trader, not me, placed $40 million on the Donald Trump victory in the US presidential election. he doubled his stake and pocketed $80 million net. The reason this bet was actually rational is that prediction markets aggregate more diverse and more reactive information than traditional polls. Polymarket was showing a Trump lead well before pollsters started seeing it. This trader had enough confidence in that reading to put $40 million behind it. In the final hours of the Biden administration, an anonymous trader won around $300,000 by correctly betting on 4 very specific pardons Biden was going to grant before leaving office. Not just Biden will pardon people, exactly who. In April 2026, 413 million bets were placed on the Iran war for more than $100 million at risk in just 4 days around the ceasefire announcement. It was the highest volume peak in the platform's history. These numbers illustrate something important about the nature of this market. They aggregate collective information that often surpasses what traditional experts produce. When thousands of people put real money behind their convictions, the result signal is often more accurate than a poll or journalistic analysis. That is the fundamental thesis behind prediction market. But this thesis has a dark side. The fact that some traders have access to information that others do not, whether government classified information, corporate information, or simply privileged access to sources, creates a fundamental asymmetry. And in 2026, several cases showed that this asymmetry can go all the way to outright insider trading, with military personnel arrested for using classified intelligence to bet on military operations. But that is the subject for another video. What you need to take away about Polymarket and prediction markets in general is this. It is an industry that went from 0 to $150 billion in cumulative volume in less than 5 years. That is now backed by the New York Stock Exchange, and that attracts institutional traders, retail participants, and specialists of all kinds. And that produces signals about the future that traditional media, pollsters, and analysts often struggle to watch. Shane Copeland, Polymarket's founder, is targeting 1 billion users in the coming years. If regulation follows and trust builds, the industry could become a standard component of how the world processes and prices information. Subscribe to my YouTube channel for your daily fintech and tech news.